All right, so my name is Tom Singer, and I am a director at the executive search firm of Stanton Chase, and pleased to be your host today for this monthly ACG Austin and San Antonio luncheon. This month, we are really excited to have Liz Hocker. Liz is the managing director of new listings and capital markets at Nasdaq, and she's going to be discussing the IPO market update and trends, including ESG, private market, SPACs, and traditional IPOs. And Liz is awesome. She and I used to work together at an earlier stage in both of our careers. So she's a lot of fun. She's really smart. And so at this time, I would like to turn this over to Liz Hocker. But before I do, I want to thank our sponsors. ACG couldn't be able to do these great events that we do if it wasn't for our sponsors, such as Weaver, Insperity, Dykma, and Higher Better. All right, Liz, go ahead and share your slides and take this over. The show is all yours.
Well, hi, Tom. Hi, everybody. I am really happy to be here today. I'm going to go ahead and share my screen. Okay. Okay, so hopefully everybody can see that. Tom or Sarah, you can just confirm that I'm set up?
Yep, you sure are.
Okay, perfect. So again, thank you for having me here today. I was really flattered to get invited to join you all. I am a longtime ACGer. I'm familiar with the group, and it's been a little while. I've been at Nasdaq for a few years now, but I used to go to the monthly meetings pretty frequently. And actually, I see a lot of familiar names here on my screen, and it's good to see you all. I hope that we can connect in real time at some point soon. As Tom mentioned, I'm the managing director of new listings and capital markets here at Nasdaq. I work with private companies throughout the 9 states in the Southwest United States and help them on their path to the public markets. I was talking to my dad last night, just on a personal note, as we see more people join, but I was talking to my 78-year-old dad last night and told him about this presentation today. And in an effort to get a pep talk from my dad, he said not to be nervous, and that back when he had to give presentations, he used to look out into the audience and picture everyone in their underwear. And I couldn't help but laugh because I had to explain to him that we're going to be on Zoom today, and that it's very, very likely that a lot of my audience truly is in their underwear, and that the new dress code is being called the Zoom bullet, where it's actually business up top and party in the back. And so in any case, hopefully, if you all are wearing yoga pants, you got those from Nasdaq listed Lululemon or Academy Sports and Outdoors. But that said, I'm going to go ahead and jump in to the presentation. I'm going to cover quite a few things during this, and I honestly am not sure how long I'm going to go. So I know we'll have time for Q&A at the end, but I'm going to touch on a few different areas today that seem to be of a lot of interest. I'm getting a lot of questions about out in the market. So I'm going to do just a brief overview of what Nasdaq really is. We're going to talk through IPOs, direct listings, and SPACs as well, kind of explain what those are and what we're seeing. We'll do just a high-level timeline for IPOs. And then also woven in there, we're going to do a capital markets update and then also IPO planning considerations. So when most people hear that I work for Nasdaq, they immediately think the stock exchange, and that's right. But there's a lot that they don't know. So one thing is that we have over 4,200 people or 4,200 companies listed on Nasdaq, that and we're the largest electronic stock exchange in the world. They don't always realize that we're also a publicly traded technology company, and we also power over 130 global stock exchanges around the world. So as you can see from the map, all the little dots in there, those are various stock exchanges around the world that actually use Nasdaq's technology. Another assumption that people have is that Nasdaq is strictly for technology companies. And as you can see from the pie chart in the bottom left, there's a nice industry breakdown of our 4,200 listed companies. And you can see everything from healthcare and industrials to consumer, financials, and infotech. So in addition to that, we have a really diversified revenue breakdown. So it's not just the stock exchange area of our business, but we also have have revenue coming in from other segments such as investment intelligence and corporate platforms. Okay, so I acknowledge this is a little bit of a brag slide, but just bear with me for a second. We have the top 5 largest U.S. public companies. We've got Amazon, Google, Microsoft, Facebook, and Apple, as well as many, many others. I put this slide together to show some recent IPOs and some specific to Texas and Central Texas, such as Vital Farms and Big Commerce, Rackspace. Most recently, we've had Instill Bio up in Dallas go public. And of course, everybody has seen and heard about Bumble. So I had to throw that in there as well. But we have a great list of logos and brands that we love to talk about. And we've had over 77% of all IPOs since 2019 have chosen to list with Nasdaq. Speaking of Bumble, you can see here we had a really nice time with Whitney and the team at Bumble in Austin. We love to celebrate with our companies when they go public, and we're proud to share that more and more companies are choosing Nasdaq for IPOs and SPAC combinations. But I don't know if you all drove past 41st Street in Austin last month around the time of the IPO the Bumble IPO, but we did the opening bell. We brought the podium from New York to Austin along with our TV production team to actually open the public markets from Austin last month to celebrate the Bumble IPO. The setup took about 3 days, and it actually really did look like a Hollywood set landed on their building. And it was a lot of fun. But in recent years, we've kind of reinvented how we open up IPOs in the US markets. We partner with some of the largest investment banks in the world to build new technology, and that's led to a lot more trust, and especially with larger companies, more and more are coming to us. So you can see in the bottom right table the number of companies that are listing with us, and this year those numbers are actually growing. Moving on to the next one. I'm driving and talking at the same time, so bear with me. So all I need is a piece of gum, and that will just top me off and slow me down for sure. Okay, so the number of IPOs this year is pretty astounding. And despite the pandemic, 2020 was a record year for IPOs, and we are about to close in the first quarter of 2021 today. And there's just no slowdown. The IPO market is also dominating the financial news. You turn it on and you're going to hear about IPOs, and it's on fire. In fact, in Texas alone, there have been 18 IPOs across all exchanges so far this year. Of those 18 IPOs, 15 have been SPAC IPOs. And in contrast, this time last year, there were only 2 IPOs out of Texas, and neither one were SPACs. So when you look at this chart, you can see that last year there were a total of 316 across the U.S. with Nasdaq, and of that there were 132 SPACs. And in just the first 3 months of this year, we've seen a total of 273 IPOs. Of that, we have already beat last year's SPAC record and have already done 195 SPAC IPOs. So that puts us at about 86% of last year, which is really driven by the phenomenon of SPAC IPOs. And it shows us that investors are willing to put their money to work to find growth. So it's pretty exciting. At this pace, really, we're headed into an all-time record-breaking year for IPOs. So on page 7, here's some historical IPO trends based on the number of IPOs and the total proceeds raised. Again, you can see that despite the pandemic, 2020 was a huge year for IPOs, and just in the first quarter of this year, we are on pace to blow last year's numbers out of the water. not just by the number of IPOs, but also the proceeds raised as well. So I think the pie chart on the bottom left corner really is a nice visual of how SPACs have really dominated the IPO market so far this year compared to all other IPOs. The chart on the bottom right demonstrates that not only are we doing more IPOs, so more companies are going public, but also bigger companies are going public, and they're raising more money than ever before. So that's showing by proceeds raised. Oh, sorry about that. So moving on to the next slide, companies listed on Nasdaq exchanges around the world come from all shapes and sizes, but irregardless, one fact remains the same. Each IPO is special to Nasdaq, and we celebrate each and every one in earnest with our clients. We work hard to make it their day. We try to make sure it's a special occasion and unique to, to every company. So we try to make it a really special moment for them, and it's a really awesome part of my job, getting to be part of that major milestone in a company's life and something that people remember for the rest of their lives. An initial public offering is an event which shares, in which a company, sorry, I lost track here. An initial public offering is an event in which shares of a company are sold to institutional investors and retail investors, what we call public investors, for the first time. So through this process, which is called going public, a privately held company is transformed into a publicly held company. There are several ways companies go public, and on this slide you can see I've got 3 charts here. We've got IPOs, direct listings, and special purpose acquisition companies, or SPACs. A traditional IPO and a SPAC have always been a way for a company to raise capital to fund their business. Now, a direct listing has been used most recently for companies that are really just looking to list their shares and gain liquidity. We don't, so we do have a filing with SEC right now that'll enable companies to raise capital through a direct listing, which would mean that they could use an auction mechanic and set a price for that initial public offering. But we have yet to see a company in the US execute a direct listing with a capital raise. In fact, with all the buzz around direct listings, there really were only 3 last year, and one was actually in Dallas. It was Thrive. So far this year, there have only been 2. So they continue to be really few and far between compared to the extreme numbers we're seeing with SPACs and traditional IPOs. The best way to look at it is that a direct listing is a way for a company to list their shares without raising capital, while a SPAC or traditional IPO are ways for a company to raise capital. A SPAC, now on the right column, a SPAC is a company with no commercial operations that is formed strictly to raise capital through an IPO and for the purpose of acquiring an existing operating company. It's also known as a blank check company, and they've been around for a really long time. They have become extremely popular lately, and I'll talk more about that later. But when you look at a SPAC IPO, what happens is that the SPAC issuer sells units, which contain both a share of common and oftentimes all or a fraction of a warrant for $10. At the end of their search period for a SPAC, which is usually about 2 years, so the SPAC goes out to the market, they look for operating companies to acquire or combine or de-SPAC with. There's a few different terms that float around out there, but they're out there looking for an operating company to combine with. And they have a time limit. They've got about 2 years to do that. So if the search for an operating company is unsuccessful, or the vote to not approve that company merger happens, then the investor that put money into the SPAC, they get their money back plus some interest. For the low interest rate environment that we've had for a while, and with a lot of cash in the system, it seems like a great option to invest in a product where there is some upside and potentially a really big upside if they announce a big merger. So hence one of the reasons why SPACs have become so hot lately. The other big thing going in the market is for SPACs is something called a PIPE, or a public investment in private equity. So they can so now when a SPAC is working with a PIPE, they can actually target even bigger companies and that they can bring into the public market. So that's really expanded the universe of companies that would consider being acquired by a SPAC. And one interesting thing about SPACs is the fact that when a SPAC combines with a private operating company, they can and often do issue projections about their future business opportunities. And that's really, really different than what companies can do when they are doing a traditional IPO, where they can really only talk about their historical operating results. So what's happened is that has led a lot of SPACs to target companies in much earlier stages. And I think we're seeing an avalanche of SPAC activity in Central Texas because there are so many early stage companies here that are doing great things. But so SPACs are coming in, they're attracted to those earlier stage companies, and they're working with them to do a combination. They're identifying through a lot of due diligence, but working with them to help them go public a little bit earlier than they would have normally done. And what's also interesting about this is that there's an inherently, increased risk whenever you're looking at future projections versus the traditional IPO, historical data. So that's a big difference in when you're looking at a SPAC combination to consider, and something that SPACs spend a lot of time and scrutinize over, when they choose, who their SPAC operating company is going to be. It's not uncommon for a SPAC to talk to hundreds of companies before they decide on who they want to do their combination with. And, right now, given the huge volume of SPACs that have come into the market, we're going to continue to see a lot of SPAC combinations. Even if SPAC IPOs stop today, just the sheer volume of SPACs that are out in the market looking for companies, we're going to continue to see those combinations happening. So it's here for a while. I don't see it going away anytime soon. Slide 9. So this is just a high-level overview of ways that Nasdaq works with companies along the path to an IPO. So, as you can see from the timeline, we like to get in early, as far in advance as we can. I like to know all companies, so I'm company junkie. For those of you on this webinar today that know me, they know that I'm fascinated by business and really love to get to know companies and connect them with resources. But typically, if we can get in front of them and get to know them about 18 to 24 months out from an IPO, we can bring in things like our Nasdaq private market team, which I'll get to in a minute. We can talk to them about some of the things that we do for private companies, like, doing some, tower images in Times Square. We can do at our market site location in Times Square that can be blasted out to social media, to announce a big event like another round of funding or a new product. We also have some shows. So we have a TV show called Mission Driven. We have another one called Cultural Capital. And also we have a podcast called Trade Talks. So we can, definitely get some branding and visibility out in the market through our, financial channels and our followers on social media. And then from there, as they get closer to their IPO day, certainly there are a lot of other factors that go into this. They're working with auditors, they're selecting banks, they are thinking about their application and with the SEC, their S1 with the SEC. And then they're also going to be thinking about not just the mechanics of what it takes to get them to go public and all the qualifying pieces that need to go into place, but also we get into things like, okay, you've decided you're going to go public. What do you want the state to look like? So we'll talk to them about, basically like planning a party. If you look at that Bumble image and you've seen any of the coverage that Bumble had or other IPOs have had, you'll see that there's a big celebration that often happens for companies that go public. And along with that, there's a lot of branding and marketing, and some companies like to be really strategic about how they go out with their PR story and the types of visibility they want, whether it's with the investors, whether it's exposure to potential customers, or if it's just really a great celebration for their employee population. So we work with them and we develop a really bespoke plan around how they want their IPO day to go, and then we work to execute it. And that execution timeline can be anywhere from, we like to, start months out, but, sometimes it's just, a few weeks out and where we start to execute on that day. And then of course, after on their IPO day, we work with them on, the celebration, whether they do it in New York or they do it from Austin or they do it virtually. We have a lot of options for them, but we also do what's called a first trade viewing, so they can actually watch their stock open for the very first time. And that's a really cool moment for a company to be able to be part of and listen in on the bank conversations and the things that are happening as their book is being built, and eventually whenever the button is pushed to go ahead and start trading for that company. So that's part of the listing day trading launch. And then there are a lot of other tools that get put into place. We're very proud of our investor relations tools, and certainly something that all public companies need to have their hands on so that they're aware of who's buying and selling their stocks and how to plan for their investor meetings and so on. And then of course, to the far right here, companies, they aspire to be part of that Nasdaq 100, and that index inclusion is really important to them. And so we work with them throughout the life of their company, continue with visibility, continuing to support them. We do a lot of co-branding with our listed companies because we really feel like their success is our success. So just high level, I'm going to just jump over to our Nasdaq private markets offering. So again, about 18 to 24 months out before the IPO, companies often engage with our Nasdaq private markets team if there's a need to kind of clean up their cap table. So if they want to, what they do is they clean up their cap table by looking at misaligned shareholders, such as early investors or former employees that, from their cap table, and ease the burden of equity compensation. They, also offer third-party tender offers or repurchase programs, which unlocks liquidity for shareholders in a controlled manner. And then we also have block trades, which enable founders and executives to achieve liquidity through one-off transactions. So really, our Nasdaq team that specializes in this area will come in, speak with the executive team about what they have going on with their stocks, and help them kind of walk through what the private market or the secondary market can do for them. And then we help execute on that. So far, we've seen, we've worked with over 450 companies since 2015, and the demand really seems to be growing. I feel like every other day I'm opening up my email and seeing more reports about more companies that are choosing to execute deals using our Nasdaq private markets team and platform. Also, again, high level, there's a lot to talk about when it comes to board governance. And so a lot of companies are thinking further ahead prior to becoming public, when they're thinking about their public board and they're thinking about all the ways that they're going to have to do reporting. After listening to a lot of our companies ask for some help, we actually have put into place a number of different tools and technology to help them along the way. And a lot of private companies have gone ahead and started adopting governance programs and developing platforms to help make sure that they have that operational sophistication around governance prior to going public. Or once they go public, they realize very quickly that they probably could use some support to kind of ease the time burden that it takes to make sure they're running a really good governance program. So we have software tools, we have questionnaires that really help streamline the annual DNO questionnaires, and then we also have different board assessment tools and education. But this is a really important area for public companies, and again, Nasdaq, just listening to the needs out there in the market, we've been able to adapt and grow and help our private companies and public companies with board governance. And then this is going to be one of the last things I talk about, but certainly not the least. It is ESG, environmental, social, and governance is tremendously important and has become even more popular recently. At one time, an ESG program was a nice to have, and now truly it's a must have. So, I know that, here in Central Texas, that conscious capitalism or cooperative capitalism has been part of our conversations for a long time. And this really does kind of feed into the ESG programs that are being developed. We've found that there are just so many different moving pieces and data points that have to be collected for companies these days when they're going public, and also to help share their story about the things that they're doing as a company to really attract investors. So we've gone out and, again, listening to our listed companies, put together a really nice platform that our IPO companies receive for free for the first 3 years to kind of help them get set up on the right foot. But this is an area that, again, we could talk about and actually have a whole webinar just on this. But again, Nasdaq has worked hard to, help companies along the way with their ESG planning and programs. So there are a lot of things that the companies think about when they go public, and there are a lot of ways that we get engaged and things that are considered whenever a company's choosing an exchange to list. Everything from making sure their brand is in alignment with an exchange that they feel good about. That's kind of the emotional part of it, but also working with the exchange to have a really solid IPO launch day so that they really get set up on the right foot. And then the technology that we have really has made a huge difference, especially in recent years. Our technology we use to open our stock is called the IPO Book Viewer, and all great investment banks that are underwriting these offerings use it to open stocks on their first day. And this has been a really critical part of our success. So also our market maker model, I have to mention that, provides a clear and transparent way for companies to go public. And therefore we've had higher volumes, which we believe lead to better outcomes for companies. We've doubled down on all of our IR services as well. So we don't outsource our IR services. They are actually in-house, and we are able to provide data that nobody else can. So having information about who's buying and selling your stock is super critical, and we're able to provide that in a format that is more timely than traditional filings that go to the SEC. But that is another area that our companies really seem to love, and over 80% of the S&P 500 use our IR services and tools after they go public. So, and we have those for companies for the first 3 years to get them started as well. And then, finally, ongoing brand amplification. We talk about IPO day being like a wedding day, and being public is like the marriage. And so we not only support companies leading up to their IPO day, but also for many, many years to come. And that's through brand amplification. We help with lead generation. And we love to partner with our companies on different events and so on. So that I think covers it. And I feel like I've been talking at everybody and to my cat in this room for half an hour, and I would love to take some questions.
So Liz, I think people will have some questions. A couple of people DM'd me with a couple of questions. One question that came to me was, how long in advance of actually doing an IPO does a company need to get serious about thinking about an IPO?
How long in advance of doing an IPO? So, companies plan, they plan for years for an IPO. It's not something that's really, taken lightly or something you slap together. There's a lot that goes into it, from your financials and working with your auditor and your law firm and your bankers. But I would say that, the SPAC phenomenon has really sped up the IPO process. And so, so we have seen a lot of work accelerate as companies that are in much earlier stages really work to build out that operational sophistication that's required to be a public company. So there's kind of a mixed bag here, Tom. It's, you know, again, 18 to 24 months out feels like about the right time when they actually really start putting pen to paper and coming up with a plan.
Awesome. And can you tell us how you've changed those IPO days, those celebrations since the pandemic hit? Obviously, for a lot of those companies, you couldn't do big in-person parties. So what did the Nasdaq do to still make it special?
Well, this is one area, that's a great question. And this is one area that we're super proud of, actually. You know, traditionally, when a company's gone public, they have, you know, you have your roadshow, you price on the last night of your roadshow, and then the next morning you go public. And so usually executives are in New York, they go over to market site in Times Square, which, by the way, if you haven't been to our offices in Times Square, you really need to check it out. We're right there in the heart of Midtown Manhattan. And in fact, when you go up to our 10th floor, we have the whole 10th floor. When you go out on the balcony on the 10th floor, you can look up and you can see that's where the ball drops on New Year's Eve. So we're just truly in the heart of Times Square. But when they get there, you know, they ring the bell usually the day of their IPO, and then they'll go to their first trade in person right there in market site with our market intelligence desk people. And so it's a very in-person event. When COVID hit, we had to rethink all of that because nobody was going to New York. New York wouldn't let anybody go to them and everybody went home. And so we had to come up with a virtual way to do that because we didn't want, you know, IPOs were not going to stop, and we still wanted to make sure we were celebrating that huge milestone with companies. And so we created virtual IPOs where we have, you know, we still have the experience where we have on our tower in Midtown, you know, the speech that happens from the Nasdaq host, the CEO's speech or the founder's speech. There's still the bell ringing, and it's all virtual. And so you watch it online. It takes a lot of planning. We do a lot of pre-recording, do a lot of clapping videos with employees ahead of time, and it all gets fed to our production team in New York, and they create a beautiful, well-orchestrated and well-produced bell ceremony for companies that still gets picked up on, you know, CNBC and Bloomberg and all that. So it's been a nice pivot. Now that things are opening back up again, we're seeing hybrid celebrations where those executives are still going to New York, but the beautiful thing about it is they don't have to worry about not being able to bring every employee with them. Every employee gets to go with them because we now have a Nasdaq app. So whenever there is an actual, when there's a bell ceremony, you can still have executives in New York, and then all the employees who have the app on their phone can do a selfie. They send it to our team. Their picture goes up on the tower. A camera across the street captures that picture and it goes back into their app. And it looks like they've been right there in Times Square, and their image has been, and they can send it to their mom, and, you know, they put it out on social media. It's super cool.
Nice. Another question somebody asked was, do SPACs still get to celebrate their IPO day, or is that just something for the traditional IPOs?
Yeah, so, you know, it's interesting with SPACs. We will sometimes have 10 SPAC IPOs in a day. I mean, it's kind of crazy right now. But usually what we see, and we love to celebrate with everybody, but what we usually see is we'll wait, and that SPAC will want to wait to do their celebration when they actually have their business combination with their operating company. So you'll see that, you know, when there's a combo, you'll see the that operating company get to celebrate with their employee population the act of that company going public with the SPAC.
So there's a question, and somebody's using the chat. It's just says USA, so I don't know who that is, but it says, what size company should consider a direct listing? What's the downside? Oh, there's multiple questions. What's the downside of a direct listing? And how should a company advance the discussion of a direct listing with the Nasdaq? So you can probably see that in chat there.
Well, I would, you know, I'm horrible at using chat on this. I'm so bad at multitasking. So thank you for reading that to me. You know, there are a lot of things to consider with direct listings, and that's something definitely to talk through with your outside counsel, the pros and the cons. And it's also something I'd be happy to set up a time to speak with somebody about it separately and bring in our team that actually focuses on direct listings, because there are quite a few nuances to the direct listing and the way that we support them through the IPO process or direct listing process.
Another question from Jeff Miller is, what activities or challenges would you say have been the biggest pain points for companies that engage in a SPAC or in a traditional IPO? So the biggest problems, pain points, roadblocks, etc.
I feel like, gosh, there's a lot that goes into going public, regardless of how you do it. And so taking the time to plan it out, having the timeline, partnering with great organizations, great banks, GCs, and so on, who've kind of been there, done that, is super helpful. The biggest pain point, gosh, I honestly don't know. I have to think about that one. I'll have to come back another time and give you a pain point. And I'm sure probably at 2 a.m. tonight, I'm going to wake up and go, oh, why didn't I say that? But, it is complicated, and there are a lot of things to consider, whether it's your SEC filing, it's your audited financials and timing of those before they go stale, so you can go public. It's your, it's the timing, the day of, it could be in the media, there could be, some challenges going on in the world that are out of all of our control. And so that can impact your IPO. So there's just a lot of different moving pieces there.
Another question in the chat is from Eric Waiton, and he says it's kind of a 101 basic question, and that is there a one-to-one relationship for a SPAC and an operating company, or do SPACs often acquire many sort of roll-ups operating companies at once and pull them all together?
Oh my gosh, that's a good question. And you know what? We are seeing all kinds of things as the SPAC universe is evolving. I have heard about companies being brought together and to go with a SPAC. And so the answer is yes. I mean, we're seeing all kinds of new things being created around a SPAC, and especially now with PIPEs being involved. There are all sorts of different creative ways to take companies public through a SPAC.
Awesome. So, Liz, if you'll unshare your slides at this point, we'll see if there's anybody who wants to come on camera and ask you any more questions. The chat seems to have evolved through all that. Does anybody have a question you'd like to unmute yourself and ask Liz at this time? All right, hearing none, somebody can still do it. I have a question for you, and that is, having worked focused on the Austin market for so long in your career, you and I both used to work together for 2 years at BCFO. What has been the best part of taking on this national role with Nasdaq? What's been the biggest thing for you going to work for Nasdaq that's been cool, for lack of a better term?
You know what I love about it is that it's so similar to everything I've always done, which is getting to know companies, executive teams, and helping them accomplish a big goal. So I did a lot of years of consulting, and I've always been one of those people that loves to be out in the market, getting to know people, networking, and also being a support person for companies as they work through a challenge. So I think that one of the beautiful things about my job is that it's super complicated. It's super fascinating. Every day is different. I've learned a ton, but I think that having this role at Nasdaq, it's still kind of just me, doing what I do every day in business. And my territory has expanded. So until COVID hit on March 3rd, I got off a plane from New York last year, and I did not leave. And so I really have done very little traveling, whereas before I was traveling about 70% of the time. And whether it was to New York or San Francisco or throughout the Southwest to different companies for meetings. So it's been a really cool journey so far. And but yeah, at the end of the day, it's still supernatural because it's still just what I've always done.
Awesome. All right. I don't see anybody else is unmute. I'll give you another couple of seconds if you have a question for Liz. Otherwise, we'll thank her and move on. Going once? Going twice?
I have a question.
Laura. Yeah, Laura, go ahead.
This is Laura Webb. Nice to meet you, Liz. I have a question
Hi,
for
Laura.
you. You love learning more about new companies, what's the best way, I guess, to partner with you or to provide you information about companies we hear about?
You know what? We can connect on LinkedIn, or you can get my contact information, and I'm always happy to set up a time to talk about that. But yeah, always open to networking and meeting new people. So yeah, absolutely would love to meet you and visit more about that.
Awesome. Well, Liz, on behalf of ACG Austin and San Antonio chapter, I would like to thank you for being with us here today. And before anybody leaves, don't click leave the meeting at this point, because I want to remind you all that we're going to go to networking in just a minute. So please stick around. It always makes these meetings more fun when everybody sticks around and plays in the breakout rooms. But at this point, I think we're going to end the recording. But before we do that, I would like to thank Liz Hocker for coming to this monthly lunch for ACG Austin and San Antonio. And once again, I would like to thank our sponsors. We couldn't do any of this without Weaver, Insperity, Dykma, and Higher Better. They make ACG Austin and San Antonio tick. Liz, once again, thank you very much. And at this time, we'll end the recording.